In this presentation, we will be entering the beginning balances for both the jobs and the accounts for our fourth practice problem where we're using classes within QuickBooks Pro, QuickBooks Desktop. Here is our QuickBooks file 4. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. Let's take a look at our objective first by going to our Excel sheet. Within our Excel sheet, we're going to say that these are our beginning balances. We want to set up these beginning balances. Now note, it's going to be a bit more straightforward to do this for a couple different reasons. One, when we enter the beginning balances and record them to the job, we don't have to basically use an estimate. I don't need an estimate in order to run the report that I need to see the job cost sheet. Now, you still want to do estimates, but many people might have some process that they use, like some other process outside of QuickBooks that they use to kind of process the estimate and may want to just put the actual numbers into QuickBooks. So you still want to do an estimate in some way, of course. However, in this case, you don't need to do the estimate in order to basically run the job cost reports that we're going to need to run. So that's one thing that's going to make it a little bit clearer for us to see the job cost reports as we enter them. The other thing that's going to be a bit more easy for us is that we don't need to use the forms in order to see last time we had to enter basically a check in order to be able to use the jobs to set them up rather than being able to use journal entries. Now, if we use classes, however, we can assign the classes as we do the journal entry. Therefore, we can enter this straight in basically as a journal entry. We don't have to do any of this kind of funny stuff that we would need to do because we're simply assigning this to a class. So we'll take a look at that. The other thing we want to consider is note that we're going to be entering these beginning balances up top. The 14, the 18, and the 9. Might be easier to see if we go to the tab number 1 in the example problem where we have our beginning numbers. We want to enter the direct materials, direct labor, and overhead. So last time we broke these items out into those subcategories, and you'd have to basically then break them out, and we made them up in the third problem, I believe it was. We broke these out. Now, you could do that. If you do that, then you may want to do this with multiple journal entries and do it in a similar way. You might want to enter a check in a similar fashion as we did before so that you can more easily assign the $14,000 out to the proper job and so on. But I want to show that you can do this with just one journal entry rather than using forms. Therefore, I'm going to put these beginning balances in as just generic numbers. The direct materials is going to go to a direct materials other of that $14,000 as opposed to all the categories that we set up. If I go back to the first tab, all these are categories we set up. I'm just going to set the beginning balance to the miscellaneous materials account. And then when we push forward, we'll be assigning to these type of accounts. So you can see kind of the difference of the breaking it out there. And so I'm going to go back to the first tab. So our objective then is to enter these beginning balances and have the supporting job cost sheets, which are going to be basically broken out on the income statement, breaking out the income statement by these amounts, the 14, the 8, and the 9 for job 14, and these amounts for job 15. Okay, so let's see what that's going to look like. I'm going to do that just with one straight journal entry. So it's a bit more straightforward. We're going to go back to QuickBooks, and all we're going to do is we're going to go to the company dropdown. We're going to go to make journal entry, and we do have to use our debits and credits in this format, but when you do the beginning balances, that might be the easiest way to do it in this format. So we're going to say this is going to be 12/31/19, and then all we're going to do is take our beginning balances and just enter them in directly. So if I go back then to here, we have cash. That's going to be our checking account. So I'm going to go back over in the checking account. Checking account had a debit balance of the 300,000. So we'll type in 300,000 here, and we don't have a class that needs to be assigned because these are the balance sheet accounts. And then the next one is going to be, we are on factory equipment. We're going to have to add that. So I'm going to type in here factory equipment, and of course you might call it just factor or equipment, whatever you want to call it. And then we're going to say save and new. That's going to be a fixed asset, depreciable asset. Continue and continue. The amount there is going to be for 510,000. So 510,000. No need for a class, balance sheet account. The next one is going to be accumulated depreciation. Setting that up. That's also going to be a fixed asset account. It's linked to the depreciable assets or equipment, PP&E. Going to set that up, and the amount there is going to be the 153,000. That'll be a credit. So credit 153,000. No need for a class there. And then we're going to go to the next one, which is going to be accounts payable. So we'll type in accounts payable and tab, setting that up. It's going to be an accounts payable type of account. So accounts payable type. Going to say continue. And that looks good. And that's going to be for the amount of the 45,000. That's going to be a credit of 45,000. We need a name here. We need a vendor so that accounts payable we know who to pay. It's going to be, I'm going to type in Home Depot for it. Home Depot. That's not right. There's got to be an E in there somewhere. I'm going to say that's right. I'm not sure. I'm going to say vendor. There it is. And then the next, and this one's where it's going to get a little bit tricky. We could put it directly to equity, but what I'd like to do is assign it to the jobs. So what we're going to do is assign it to the actual jobs. To do that, we're going to have to hit the income statement account. So notice I recorded this as of the period before the one that we're going to be working in on. It will roll into equity as of the current period, but I want to put it in the prior period by job. So if I run the report for the prior period, it will be added to the job. So we need to put this into our categories here, our categories of the direct materials, direct labor, and the overhead. So I want to put this into direct materials other account so I need to make a new account for it. I'm going to make a new kind of generic account that's going to go under the parent account of direct materials. So I'm going to call it direct, let's just call it materials. Materials, and I'm going to say other. So it's not going to have a specific category. We could break them out by category, but I'm going to put this into other so I can just group them together to show how they will be set up. I'm going to set up a new account for that. It's going to be a cost of goods sold type of account. Continue. It's going to be under cost of goods sold, and it's going to be under the sub account now of the direct materials, just like we set up before. And then I'm going to say save and close. And note, again, you could break it out by all these kind of materials, but I'm just going to put it into a sub account here. And then we're going to say save and close. This needs to be assigned to a job. So we're going to say the direct materials here needs to be assigned to job number 14 for 14,000. So I'm going to go back over. We need to have a debit of 14,000 assigned to job number 14. Cancel 14, job 14. I'm going to make this a bit bigger so we can see this. Okay, and then we're going to say direct materials, direct, well, I just called it materials. Materials other, once again, same account. And that's going to be a debit, and we're going to put that to this one for job number 15, 18,000. So I'm going to say 18,000, and that's going to be job 15, 15 job. And then I'm going to say materials other, same thing. And this one's going to be going to, actually we don't have anything for job 16, that's right. Then we're going to go to the direct labor, same kind of thing. I'm going to say direct labor. And let's call this direct labor. And then again, I'm just going to call it other, because I'm not going to put in specific categories in the labor like you could do if you're subcontracting or something. You might call it labor for different things, the electric or this or that, and utility, whatever. So I'm going to say tab. We're just going to make the generic name. I'm going to set up the account once again. It's going to be a cost of goods sold type of account. Cost of goods sold type of account. Continue. And then I'm going to make this a sub account of the direct labor. So of the direct labor, it's going to be under direct labor. We're going to say save and close. And that's going to be for job number 14, 18,000. So I'm going to say for job number 14, 18,000. That's going to be for job 14. And then direct labor other for job number 15 is going to be the 16,000, our beginning numbers. So 16,000. And that's going to be for job number 15. Nothing's in job 16. So now I'm going to do the overhead. Same type of thing. Now we could break out the overhead again, just like with the materials, to the different components of overhead, like depreciation, rent, the utilities. We're just going to put it into the generic category now, overhead other, and then we'll see how to break them out as we go through the problem. So I'm going to put this into overhead now. Overhead, I'm just going to call it other. Set that up. It's going to be a cost of goods sold type of account. So we're going to put that into cost of goods sold, continue. It's going to be a sub account then of the factory overhead account, factory overhead. So factory overhead sub account, I'm going to say save and close. And we're going to put that on the books for job number 14, 9,000. So job number 14, we're going to have 9,000. Tab, tab, tab for job 14. And then we're going to have overhead. And for job number 15 is going to be 8,000. 8,000 for job number 15. I'm going to say 8,000. Tab, 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 tab for job number 15. And so there we have that. Note I messed up on the direct labor. The direct labor has too many zeros here. It should be 16. So we've got the 14, the 18, the 18, the 16. So then if I was to process this, let's pull out the trusty calculator and see if we did this correctly then. We're going to say that these are going to be the jobs that we set it to. So we got the 14,000 plus the 18,000 plus the 18,000 plus the 16,000 plus the 9,000 plus the 8,000. That's going to add up to the 83,000. And that should be this job and this job. That's going to be our 83,000. So note that then that the amount applied to the job and then the rest is going to be going to equity. So we're really basically coming up with what this number is, the 612. So then if we take the amount that we need to make this in balance is going to be 695, which QuickBooks will generate for us in the next line. So if I take that 695 and subtract it from the 83,000, so the 83,000 minus the 695,000, that's going to give us our 612. And if we go back to, that's going to be our 612 here. So that's what we need then. The rest then, in other words, is going to be going to equity. So I'm going to put it up here. We're going to put it to equity. And we're going to go to the owner's equity. And that's going to be a credit of the 695,000. And I'm not going to assign that to a job. So there we have it. So just note that I know this last piece is obviously the most confusing piece, and we're doing this with a journal entry. So the beginning balances are a little bit tricky. If you're starting from scratch, obviously you wouldn't need to do this process. But just note that to set this up, you can do it with one journal entry. And basically you want to set up the income statement accounts, which are going to be part of the equity, into the jobs so that you can basically process the jobs. And so that means that the income statement accounts here, and then minus the equity, all this is going to roll out into equity and net out to be whatever equity should be at the beginning of the balance, which is going to be that 612. Okay, so that's going to be the first process. And so let's say save and close. See what this looks like. We're going to say okay, and save anyway. And then we're going to go to the reports. And let's take a look at our trustee trial balance. So if we go to the reports drop down and to the accounting and taxes and look at the trustee trial balance up top, then we'll change the dates to 01/01/20, the current period we will be working in, 12/31/20, to see if our beginning balances are correct. There you have the checking account, the accumulated depreciation, the factory overhead, the accounts payable, and the owner's equity at that 612. Let's take a look at this in the balance sheet format. If we go to the reports drop down, company and financial, and take a look at the balance sheet standard, and then we change the dates to 12/31, or let's just say it 12/01/20. That's the current period we will be working in. Once again, we've got the cash, we've got the factory overhead, the accumulated depreciation, the accounts payable, the equity, so everything looks proper. Note down here that it's in equity, and if I went to the day before this, the year before this, 2019, then if I go to 12/31/19, note then down here we have the portion that's going to be in net income, which is at 83,000, which we broke out that 83,000 into our beginning balances. What that's going to do now is if we run the profit and loss report, if I go to the reports up top, we go to the company and financial, we're used to seeing the profit and loss standard report. Obviously, if I run this for the current year, 2020, there's going to be nothing in it, right? 01/01/20 to 12/31/20, nothing there. That's what we want because it rolled out into the equity section. If I run it for the last year then, 2019 to 2019, then we see the amounts that we applied to the classes. Nothing's in income, but we want the amounts that were applied to the cost of goods sold. Cost of goods sold is this whole drop down. There's our 83,000. That's going to tie out to our classes on our reports. There's our 83,000. If I open up the cost of goods sold category, then I have our categories of direct labor, the direct materials, and the overhead, which we just put into the generic accounts under it. So a sub account, direct labor other, direct materials other, factory overhead other. Now let's run the new report, which is going to show this by class. So if I go to the reports dropdown, we go to the company and financial profit and loss by class. Profit and loss by class, this is the one we're going to be working with all the time. This is basically our job cost sheet now. Profit and loss by class. If I run this from 01/01/19 to 12/31/19, now we have our classes here. And so note it's all under the open jobs because it's a subcategory of the open jobs. We put all the jobs as open at this point. You can collapse this category. We have no closed jobs, so it's not going to show the closed jobs, but if you collapse it, it'll then show you simply the open jobs and the total. And if you open this back up now, then obviously it's going to show you the two jobs and then the open jobs and the total. And this gives us our detail. This is basically gives us our detail of the job cost sheets. So job number 14 has the 18,000 direct materials, the direct labor 14, the factory overhead, that's going to be the 41,000. Here's our 41,000 here. And then if you go back over to job 15, 16, 8, the 16, 18, and 8 for the 42,000, that's going to be our amount here. And then the totals, of course, are going to be the 83,000. So this gives us our detail. And it does the same kind of thing as the job cost sheet last time. It does record it into cost of goods sold. So we have to use the method that we're recording it into cost of goods sold. But again, as long as we can do that reconciliation process as we see here, it'll work in the same kind of method process as we did for method 2 and 3 in the prior problems. So we have our job cost system. In other words, these are our beginning balances. They're going to roll into the equity section. But as long as we know that, then we can do our little reconciliation here. And we can then, as long as we can do our reconciliation, make any adjustments we need to be on whatever basis we need to be in. We just need to make sure that we have the supporting documentation to make those adjustments. So it'll be the same kind of process. If we need an adjusting entry at the end of the period, we can then enter our adjusting entry. So this is actually a pretty nice way to see it. And these collapsing columns make it really nice to see the open jobs and the closed jobs. And the other thing that you can do is run this report for, just like the job cost report, you can run the report for longer periods and see the open jobs for over the current period. In other words, normally we have January to December and we'd run a profit and loss from January to December. But if you need to see the job report from last middle of June to the end of December to see all the costs related to the current job, because it's been running over the year-end period, then you can run that report, and that's fine. So you just need to be able to know how the dates are going to be working to run the reports. And then again, this little collapsing feature, it makes the reports a little easier to see. So next time we're going to continue forward and start entering the normal transactions, and this will be more straightforward. Obviously, when we set up the beginning balances, that's only a one-time thing that you may not need to do if you're starting from scratch to do that, and that's that's a complicated thing no matter what happens. And now we'll start entering the data next time.